Thank you very much. Please take your seats and we can begin. Thank you. So it's my pleasure to welcome you here today to the fantastic new facility of the Foreign Correspondents Club here in the Nijubashi building. My name is Robin Harding. I'm the Tokyo Bureau Chief for the Financial Times, and it's my pleasure to chair this press conference today on one of the biggest outbound M&A deals Japan has ever seen, the acquisition of the UK-Irish drugs company Shire Pharmaceuticals by Japan's own Takeda Yakuhin. The deal, carried out under Takeda's chief executive Christoph Weber, has been controversial both for its price and the debt and equity funding that will be needed for Takeda to pay for Shire. As a result, it has been unpopular with some of the domestic holders of Shire stock, including our speakers today, Mr. Kazuhisa Takeda and Shigeru Mishima. Mr. Takeda, a member of the founding family and former Takeda executive, is speaking in his capacity as chair of Thinking of Takeda's Bright Future, a campaign group, and shareholder in Takeda. And he's accompanied by Mr. Mishima, a long-time veteran Japanese equities analyst, best known for his work covering the Japanese pharmaceutical sector at the foreign-backed UBS. So I'd like to turn it over now to Mr. Takeda to give opening remarks, and then we will have question and answer. Thank you. Mr. Takeda.
Yes. Thank you very much. My name is Kazuhisa Takeda. Good morning, ladies and gentlemen. I should like to thank you very much for giving honorable opportunity of the members of global media. And I am a core member of TTFB. That means Takeda, think about Takeda's bright future. And my English is very poor, therefore I think everybody can speak Japanese. No? May I speak Japanese or not? Yeah, okay. Please understand my English is very poor, therefore I'm not sure whether you can understand my expression or not.
Let me just check. Ito-san, are the rules today that this is an English press conference? Okay. Would you mind speaking in English?
Okay.
Thank you.
Okay. And first of all, I would like to explain TTFD that composed of 130 members, associates of Takeda graduates, and Takeda's share, aiming at retaining Takeda's shares for a long-term period and strongly wishes a sustainable, healthy growth of Takeda company for many years to come. And that's our basic standpoint. And Takeda family has also followed us and support us. As for Shire issue, we are definitely against this issue because financial risks are too great and the expected merit is quite limited. That's one of the reasons. That's two major reasons. And maybe Mr. Mishima will explain more in details about our decision. And but one thing I would like to tell you is that we don't simply oppose Takeda's globalization. And I think M&A is quite necessary for Takeda's future. Most of our founding family has also the same opinion, including Kunio Takeda. As you know, Kunio Takeda is a former CEO and chairman of Takeda company. And during his 16 years tenure, he has reinforced Takeda's leading company. in Japan. And he agrees with our assessment. As you know, in Financial Times in November, he has expressed his oppositions in that article. And also, a few days ago, Japanese newspaper like Asahi, Nikkei, Mainichi, he has also expressed oppositions in that article. Well, Takeda continues to have a strong prospects of sustained midterm growth of any major Japanese company. Concerns over the new product pipeline are shared by every company from time to time. And I think it's very important. Oh, sorry. I have to say some other things. As to product pipeline, it may be true that Takeda has not been successful in recent years to strengthen its new drugs and needs to the more prominent products. But I think Shire is not the answer. I definitely say so. Anyway, it's by far the large acquisition of overseas by Japanese company. For example, SoftBank, Arms Holdings, that's acquisition's amount would be 3.3 thousand billion yen, while SoftBank's turnover is 8.9 thousand billion yen. That's okay, I suppose. But Takeda's turnover is only 1.8 thousand billion yen, and that's beyond, this acquisition is beyond Takeda's position. Don't you think so? And as to shareholders, most of Takeda's individual shareholders are long-term investors who depend on Takeda's stable dividends and also expect stable management. But I think it's very hard, very difficult to maintain Takeda's such a high level of dividend. I mean, 180 yen is too high. And right now, it's also, I think, taco high. Do you know the meaning of taco high? Octopus dividend. Do you know that? No? Octopus eats his feet by themselves when hungry. Takeda is also continues to pay the high dividend without enough profit. That's we call it takohai in Japanese language. With the acquisition, if successful, Takeda will no longer be a Japanese company. More than 70% of the company will be foreign-owned and managed entirely by non-Japanese management. That's tradition and history of over 230 years is what made Takeda great, and the respect as a premier company in Japan. Mr. Weber always pays lip service to Takeda history and values. I met Mr. Weber once or two times per year to exchange views about Takeda's future prospect. And at that time, he mentioned that not so medium size of the M&A would be investigated by the company. That's okay, I suppose. But I gave the Takeda's what we learned from Takedaism. And in that seat, I handed over to Mr. Weber. And this seat, I mentioned, the scale-up of the company business operation is not necessary, sort of in Takedaism. The preliminary mission of the top management is to let the company, corporation, organization continues to exist in its healthy conditions. It is obviously one opinion that the company's corporate strategy to carry out M&A in order to strengthen the pipeline of the company. However, haste and easy decision for big amount of the investment should be avoided. I said like that. But when I met in this March, he said he understands this point. However, he suddenly announced that this acquisitions. I was very much shocked about this announcement. Well, Takeda continues to have the strongest prospect of sustained medium-term growth of any major Japanese pharmaceutical company. Concerns over the new products pipeline are shared by every pharmaceutical companies from time to time. And I think it's very important for Takeda to promote open innovation and to establish international clusters like with governmental research institutes and bioventures. As to acquire the small and middle size of the bioventure, that's also one of the strategy for Takeda in the future. Another important possible way is to rearrange domestic pharmaceutical companies. Well, conclusion, Takeda is not in a situation to rush into such a high acquisition. On the contrary, it shows strong growth ability in global market with existing products like Entyvio and Ninlora. Takeda is one of the major Japanese pharmaceutical company which has the steadiest growth potential for the medium terms without M&A. Out of 7,000 billion yen acquisition cost, 3 billion yen, 3,000 billion yen in cash will flow out of Japan. If the company put such a large amount of money in investing in research bases in Japan, there would be great benefit. I think it is very important to put priority on R&D and to regain the trust from research institute and biotech venture in Japan. I don't think the company, this is a very important point, I don't think the company that has lost respect of its home nation would survive abroad. Thank you very much.
Thank you. Mr. Mishima, are you going to add some remarks?
Okay.
Thank you.
Thank you. My name is Shigeru Mishima. I am an advisor for the group TTBF since April this year, when I was asked to write a report on Shire. I knew Shire. It was a very good good quality small company. But I was surprised to see how large Shire today is. And I was really amazed by inorganic growth of the company in 2 years. Its sales doubled, more than doubled since 2016. And it's a rare disease company synthesized by a series of M&As, which produced a lot of risk and troubles in its balance sheet and other financial statements. So that was what I did, writing a report. And since then, I served the group as an advisor. And today, and so I wanted to raise these topics again. Shire is an inorganic company synthesized by M&As, and it's a very risky company. I wrote this in my report published in May, and it's in the home page of the group, so please take a look. I would like to focus on the recent 2 months after the group issued a public letter, open letter to Mr. Weber. So turn to the page 2 of the presentation on your table. Let me start with open letter sent to Mr. Weber on the 1st of October. These are the 4 questions raised by TTBF. Debt and EPS, hemophilia, minute of board meetings, and sustainable growth. These are all about disclosure and efficacy of hemophilia products Shire has. And in the next page, after 1 month, Mr. Weber sent a reply, but it didn't answer to any of the questions. So the group issued the second open letter with 2 new questions on top of the 4 previous questions. The new questions are about corporate governance and conflict of interests. In the next page, in Japan, investment banks are allowed to hold stocks of their clients, and management of companies tend to rely on such financial institute for their position. And also, service providers in Japan hold stocks of their customers. This cross-shareholding is also creating a lot of problem in corporate governance. In the next page, TTBF is asking investment banks that make profits from the Takeda Shire deal. Financial institutes are making profits of already 100 billion yen just for advisory fees and legal and public relations. And from here, there will be more profit for financial institutes by means of new stock issuance, lending, and so on. So, if it's a big problem for the corporate governance, because if this merger goes through, Takeda is highly likely to suffer 2 trillion yen, $20 billion impairment loss on its goodwill. When this happens, those financial institutes will be asked if their voting for the deal is for the sake of their clients or the voting was for the profit of their parent, financial institutes. In the next page, the group issued the last open question to Mr. Weber after the circular for EGM was announced on 12th of November. And this is about accountability. Mr. Weber has declined to explain or disclose earnings outlook for the new company. He only talked about EBITDA tripling, which was very misleading. And our TTBF has kept asking, talk about EPS. EBITDA is not an adequate right explanation for M&A. But in the circular, finally, Mr. Weber disclosed EPS outlook, which is not increasing in the first year, not in the second year, but in the third year. This was a serious downward revision to what he has talked. So I raised issue. I asked the UK authority if this is against the UK rule, which Mr. Weber has always used as his excuse not to disclose future outlook of EPS. Then the reply I got from the authority case officer of the British takeover panel was like that. You can see that in the second paragraph of the page 6. It is actually what he said was that it was not a breach. The UK, there is no such provision to prohibit companies from disclosing any of earnings outlook. So Takeda was not breaching the rule. Even it was only 3 weeks before EGM. A serious downward revision was not a breach. So the next page, I conclude that Mr. Weber's explanation was not right. There was no such UK rule, and he simply avoided his accountability. Let's see how important EPS is in evaluating M&A. Next page. This is the chart illustrating share price, which dropped by 28% compared to average 55% increase among major Japanese competitors. I think it's reflection of uncertainty, lack of explanation on EPS. It's reflecting EBITDA. Mr. Weber has been talking about tripling EBITDA all the time, but this really caused uncertainty. And stock market is not stupid, and Mr. Weber was not able to cheat the market. In the next page, EPS is the source of dividends. And Mr. Weber has been talking about dividends. 180 yen dividends per share will be maintained. But this is impossible. EPS is not growing. It's less than dividend this year, next year, and even the third year. It cannot continue like that way. So Mr. Weber is talking about dividend, which is not possible. So it's it's the problem. The chart, blue bar is the share 180 yen per share dividend Takeda's shareholders are receiving, and orange bar is Shire's dividend, and the line is the source of dividend, which has to be doubled because of the new stock issuance. And Takeda cannot maintain this nearly 300 billion yen, $3 billion dividend source. If new Takeda continues to pay out this amount, it has to eat from amortization, EBITDA, and amortization has to be accumulated for 10 years to prepare for the next M&A. That's the inorganic growth. Shire is an inorganic company. Shire's growth didn't come from its R&D, but came from acquisition. If Takeda prepares that same amount of money for the next phase of the products, the Shire products will lose most of its sales within 10 years. And if new company hasn't accumulated the amortization for that, the business will not continue. So it's not a sustainable business model if EBITDA is the only management index. That's too much for. So let's go to the next page. It's about Shire's EBITDA, which is 3 times larger than its pre-tax profit last year because of amortization mainly and other M&A related costs. So talking about EBITDA neglects all the negative side of M&A or the cost of M&A. So you cannot use EBITDA in evaluating value of M&A. In the next page, this is Shire's sales in the last 3 years. And as you can see, the top line, the sales more than doubled in 2 years. And the green color products and businesses are the acquired products. And because of this inorganic sudden expansion, Shire has a lot of problem in its balance sheet. In the next page, marked with orange color are the goodwill and intangibles on the left-hand side, and on the right-hand side, these are the borrowings and additional paid-in capital, which means there is no such money anymore, just a paper saying that this was paid to the acquiring company, and we paid it for some belief that it is something good. So the problem is, are they really good? It's good now, but are they really good for the next 10 years? If the EBITDA doesn't continue the same level, then they have to realize the loss at that time. Okay, so going to the next page. This is the last topic, but the most important one, hemophilia. In the next page, Shire is the largest manufacturer of hemophilia products with 40% share of the global market. And this is threatened by innovation of Chugai, Pharmaceutical, and Roche. And the product was approved by FDA last year, and this year again for all patients suffering hemophilia. And Hemlibra is the real threat to Shire's business. In the next page, this is the table, 5-year history of the hemophilia treatment and my projection for the next 5 years. Basically, I forecast Shire's product, Advate and Fiber, will lose most of its sales, taken by $5 billion sales of Hemlibra from Roche. And in the next page, this is the list of recent development in hemophilia research. At the top, as I mentioned, FDA approved Roche Hemlibra for hemophilia A without factor VIII inhibitors, which means all the patients can take this product, which is good. Next page. Hemlibra is now approved by FDA for all the patients and is good for subcutaneous once a week, once every 2 weeks, and once every 4 weeks. And it's self-injectable. Shire's product is Advate, which is intravenous injection, which has to be once every other day, 3 or 4 times a week. In Japan, patients have to visit hospitals all the time. So advantage of Roche product is obvious, and it's quite natural to anticipate loss of business, hemophilia business at Shire. So let me conclude in the next page. Observing the M&A process of Takeda and Shire, Hemlibra has always been there behind the scene. It was the reason why Shire's share price dropped from the beginning of the year to PER of 10 times and PBR of 1.0 times, which means stock market determined this company is almost out of business. This is a dissolution value. And the recent EGM, which is taking place in 2 months, in the day after tomorrow, when EGM was announced, it was earlier than 2 months. Originally, the closing of the deal was scheduled in March, but Takeda accelerated it by 1 month and another 1 month by calling for EGM 3 weeks ago. Why? And there is a serious problem. In order to get this EGM circular out, Takeda abandoned the most important pipeline product, SHP647. It offered the European Commission to divest the product so as to EC to complete the review in the middle. And EC issued a letter that we can stop the review if you abandon 647. And with that letter, Takeda issued the EGM circular. And how could a responsible manager abandon the most important pipeline product for just 2 months acceleration of EGM? I have a serious doubt. Takeda came to know that decline in sales of Shire products in hemophilia is very fast. And if they wait 2 months, the fourth quarter results will come out and everything could collapse. The M&A model could collapse. Thank you very much.
Thank you very much. So we will now move to question and answer. I will ask one question while you consider yours, but please raise your hands, and when called to ask a question, please come forward to the microphone and state your name and affiliation. So my question first, the EGM is in 2 days. What do you expect the vote to be? How many shareholders, how many shares do you expect to vote against the deal?
May I? I expect 25% will support. Support the group, or there will be 25% at least. I hope objection for the deal. 10% is the base. If you remember, TTBF made shareholder agenda at the regular shareholders meeting in June and got the support of nearly 10%. So that was the start line for the group. And after that was end of June, and there were lots of newspaper coverage about what is Shire, and the goodwill, the huge amount of goodwill, and various issues were covered by newspaper. So I believe that the objection is the group gained another 5% on top of the 10% and 15%. And finally, Takeda family, thanks to Mr. Takeda, Kazuhisa Takeda, Takeda family is now united to stood up against this deal. So 10% on top of the 15% and 25%. This may not be enough in order to veto the M&A. It has to be more than 1/3. But as we described, corporate governance issue, for instance, Nomura Securities has Nomura Asset Management, which has something like 2-3% of Takeda, and various other financial institutes abstain from voting. The denominator will become not 100%, of course, but 70%, I hope. Then 25% will work to veto the merger.
Okay, thank you. I'd now like... Oh, sorry, please.
It's rather optimistic estimates. And Takeda family does have only 2 or 3% right now for the shares. Therefore, it's rather hard to get totally 10% of the Takeda's shares. I mean, Takeda graduates, or Takeda OB does also have shares. Therefore, altogether, I think it would become 10% for the against for this issue.
Okay, thank you. I would now like to take questions from the floor. So if you have a question, please raise your hand. Yes, over at the far table.
My name is Baumgartner. I'm working for Swiss Radio and Television. You have strong arguments against the purchase of Shire. So why can't you convince more people to oppose the purchase? And have you thought about organizing an internal putsch against Mr. Weber? Nissan style, if you are so, if you don't like his management style and strategy. And what will happen to Takeda share, do you think, after the purchase? Thank you.
Okay, so why not more opposition? Why not try to push out Mr. Weber? And what will happen to the shares after the deal goes through?
The group focused on retail shareholders, individual shareholders in Japan, which account for 25% of total shareholders of Takeda. The group gave up domestic financial institutions, 30% of the total, thinking that corporate governance is not working, stewardship is not working. They don't know the word fiduciary duty. I don't know the word for Japanese, the fiduciary duty. But after the EGM was called, the group hurried to talk to domestic financial institutions and held a series of emergent meetings. And there were lots of, the group was able to see more than half of the top 10 domestic financial institutions. The most large just once, more than half. If we exclude, of course, deal makers didn't show up. Nomura, Mitsubishi, Sumitomo didn't show up, but and JP Morgan, Jardine Fleming Fund didn't show up. But other than that, most large institutes came to the meeting. I was very happy to talk with them, and I realized that they paid attention to the home page of the group. So they signed up for the meetings, and I was very happy. So I'm expecting them not only abstaining from the vote, but some of them, I hope, help vote no to the deal on their own judgment. And second point, Mr. Weber?
Yes.
It's the group is against the deal and veto the deal with 1/3 no votes, but it's not a vote to kick out Mr. Weber. Of course, veto it's less than a half. It's we cannot veto Mr. Weber, and I hope he returned to conversation with Mr. Takeda and change his course and do better job. And he realized his overspeed and reckless driving, and his passengers are frightened. So please go back to safe driving.
And finally, what do you expect to happen to the Takeda share price if the deal is approved?
I'm really afraid of steep decline in Takeda share price after the deal goes through. There are lots of arbitrage and hedge fund activities, and they are short-term oriented, and they will take profit from the deal. Shire's share price is currently around £45 compared to £49 offer price. So they would vote for the deal, and once the deal is done, they will get £49, another 10% gain realized. That's the time when the share price will see huge, massive decline.
Thank you. So, next question, please. Yes, gentleman at the front.
Hello, Gavin Blair, freelance. 2 questions. Is the entire Takeda founding family then against the deal, including Miss Mitsuko Takeda, firstly? And secondly, the Takeda Science Foundation has a number of family members on the board. Does that mean it's likely to come out against the deal as well?
美津子さんも反対しているのか、それから武田科学振興財団の中にも武田家の方たちがいますけれども反対。
So far, I don't know exactly about the head family of Mrs. Mitsuko Takeda. I explained our opinion to the family, and she said she understood our opinion, and she didn't say yes or no. And in case of Takeda Foundation, maybe today they have the meetings, directors' meetings. Therefore, I think they will decide the final decision. And as you know, Mr. Kunio Takeda is the chairman of Takeda Foundation. Therefore, maybe they follow his opinion.
Which is against.
Okay, thank you. Any more questions? Yes.
Martin Kölling with the German financial daily Handelsblatt. You mentioned, Mr. Mishima, you mentioned that you expect basically 30% of the voting rights to abstain. Can you explain how sure you are? So, what is basically the probability that so many Japanese investors, basically institutional investors, will decide to abstain?
I'm not saying 30% of the Takeda shareholders should abstain, but 30% of Takeda shareholders are domestic financial institutions, and Nomura, Sumitomo, Mitsubishi, UFJ, those are financial institutes that are in this deal, making profits for their own, should abstain from voting. I believe that's becomes something like less than 10%, but more than 5-6%. That has some impact, and I hope overseas institutional investors who account for 35%, they are in a same boat as domestic retail shareholders, not business related, and I hope the sum of long funds are still in Takeda. Not only hedge funds and arbitrage, I don't expect them to be supportive. They would prefer the deal go through, but long funds, I hope they vote against this deal. They have already suffered nearly 30% decline in the share price.
Thank you. Next question.
Süddeutsche Zeitung, Neidhardt. We have so many examples where mergers by Japanese companies with foreign companies failed, starting with Docomo in the 1990s and Nomura, which is involved here with the Lehman European part. And very often later the explanation is the Japanese companies didn't do their due diligence. And if I follow what you say about Hemlibra, I think this is kind of layman's due diligence. Do you think Takeda hasn't done its due diligence, or is there other reasons?
Yes, at the general shareholders meeting, the regular annual AGM, the management explained that they have known this Hemlibra issue and they have paid much attention to this, and the offer price is already discounted this Hemlibra things. But I strongly believe that their due diligence is not thorough, and impact of Hemlibra is something like a 30 to 50% decline in Advait sales, and impairment of goodwill could be much larger than they have considered. So that's why TTBF asked for minute of directors meeting, minute of to be disclosed. It's right for every shareholder. Anybody can ask court to get the right, get it disclosed. So before shareholders have to do that themselves, we ask the management to disclose the minute of the board meeting to prove how thorough they went through this Roche Hemlibra issue. But without answering to the question, the company called for EGM. Thank you.
Thank you. Are there any more questions? Yes.
Thank you. Hi, I'm Lisa Du with Bloomberg. I'm just curious, you said you've met with several institutional shareholders and you named the ones that wouldn't come and meet with you. Could you name some of the institutional shareholders you guys have met with and what their reactions were to your arguments against the deal? And if any of them have made a guarantee to you that they will vote against the deal? And my second question would be, in the case that the deal does go through, does the group planning on continuing its activities, and what are some issues you guys hope to continue pushing for?
Lisa, I said that I met with most of the top 10 leading financial institutes in Japan, other than Nomura, Sumitomo, and Mitsubishi, and maybe you can imagine who they are. And I think it's not adequate to name give individual names here. Okay.
If you're not naming names, can you say if any of them guarantee that they will vote against the deal?
Oh, no.
What their reactions?
TTBF has never solicited voting, or we didn't do the kind of proxy fight to get voting rights representing them. The group only advocated the opposition to the deal. So we have never engaged in any proxy work. Okay.
Okay, and the second question, which was, if you lose the vote, is that the end, or can you continue this fight?
For me, my job will end with this meeting. So I hope Mr. Takeda continues to fight.
No, I don't think so. We have to study for the next general shareholders meeting. I think we have to very carefully think about what is the Takeda's future management. And we would like to maybe give them the question to the top management about the future Takeda's strategy and tactics, and also the management personnel. I think that's what we would like to do. and maybe Mr. Mishima will also continue to do work for us.
Martin has another question.
Martin Curling again. Can you explain why you didn't engage in a proxy fight? Can you explain why you didn't engage in a proxy fight and just in basically advising?
You know, it's something the group, it's including myself, members are all laymen, amateur in M&A, and then we didn't know anything about proxy fighting. And actually, we went to visit a lawyer, a law firm, if it is feasible. But the timing was too late, and the cost was something we had to consider.
Okay, I was going to say I would take one last question, and I will take it in Japanese if anyone really wants to ask a question in Japanese. 最後の質問、日本語でも結構ですので、日本語で伺いたい方はいらっしゃいますでしょうか? Okay, you get the last question in English.
To be more concrete about a fight post to Wednesday, if it goes through, are you willing to take legal actions? And Mr. Takeda said there might be, you have to think about the management. Are you going to try to organize a putsch against Mr. Weber if it goes through?
The group has not reached that stage yet, and we haven't thought about that yet.
Okay, if there are no more questions, then we will finish there. Thank you very much to our guests, Mr. Takeda, Mr. Mishima. We will all look with great interest at the EGM in 2 days' time to see what the level of vote against is. And if the deal does go through, I'm sure we will all be following closely to see whether this is a glorious success or another to add to the long list of Japanese overseas purchases that haven't worked out quite as the buyers expected. I would like to, as is our custom here, give a year's honorary membership to our speakers, Mr. Kazuhisa Takeda and Mr. Shigeru Mishima.
Thank you very much.
Thank you very much. Thank you. And with that, we're adjourned. Thank you.